Hello everyone and welcome back to another video. Today we discuss the stock, crypto and commodities markets and deep dive into the key levels that you need to be looking at. We've got the potential here for an inverse head and shoulders on the stock market, and we also have, of course, cryptos breaking out. But at the same time, the bears are coming in full force with big shorts placed on the QQQ. So what's next for the market ahead of Jerome Powell and the Fed? There's a lot to discuss. Stay tuned for more. See you soon. All right, everybody. Well, welcome back to our Market Close daily show where we cover everything to do with stocks, cryptos, and commodities. If you like any of those, please remember to subscribe. And this is for the 28th of February, 2022. Let's take a look here at the heat map of the large stocks. It looks like not much was going on, but if you have been following our videos, you'd know that Tesla and pretty much Nvidia provide two of the better day trades at the moment in terms of high volatility with some kind of technical prowess. And Tesla was the one breaking out in the session. It went all the way to the resistance, and we'll take a look at that later. But a nice trade there, and certainly, I'm sure, welcome for many traders in terms of Tesla and their investments. Let's now talk about what happened in the market. It was up, it was down, and then it was up again. Wall Street did buy the close, though they didn't break to a new level. And the futures in the Asian session were down almost as much as 3% or 2.5% to 3% at one stage, depending on the market you looked at. But they all did recover throughout the session, throughout the futures into the real market. That's fairly important, as we know that it means that the real volume was there for the move. However, it is very weird when you start looking at the sectors. Usually we look at the sectors to get an idea of whether Wall Street's stacking defensive plays or growth plays. And the only thing I could say about the previous day was some of the stuff we've tweeted, and we've obviously got in our private community. We've been talking about the solar index for some time now, the sector, especially since the move the other day. They were going well. Hyper stocks and the solar index, or anything to do with these high growth that have been beaten down, it was their time in the sun for the last couple of sessions. It's gone up consistently, and all of them have. Let's now also talk about souring on tech. Now, this is what probably a lot of people are discussing on the market. A huge amount of short interest surging into this inflation data. Now, we've got to be careful here, because we're at a point where you'll also notice it was about as high as shorts ever got during all of these weaker periods. This is a point, though, that you've got to think, okay, who's doing this? And it's a mixture of everybody. Everyone's on the short trying to get these Nasdaq down into inflation. We're at a key critical zone, and it's really important to see these charts, but at the same time, the price action or the technical analysis will show us the way. Whenever you're talking about bear markets, you've got to expect huge pullbacks and huge reversals. So it's better to be sometimes sharp, nimble, and quick in the markets, being day trading and scalping, not swing trading. We'll talk about that soon. But it's better to be really focusing in on your system. And of course, if you have specific stocks you want to pick up, maybe DCA, dollar cost averaging, is the way that you could go, with key technical levels being where you take a nibble for your longer term holds. Let's talk about the invasion. Obviously, this is going on and it's very sad. And obviously, our heart goes out to everybody affected by this. But in terms of the raw market, what tends to happen is we do see a lot of pickups here in terms of what happens in the markets. We see these invasions turning into positive sentiment. We've got it this time around. You might say, but Tom, the Afghanistan war, look, it went down. I think the key thing there is the market was already in a mass free fall at that point. The dot-com bust happened, and it was different. So will this time be different, or will it be more of the same? I think we're at a critical point in the markets that we'll be taking a look at soon. We also need to remember historical S&P 500 corrections. This is since 1965. Basically, an average, excluding recessions, is negative 15.4%. The Nasdaq went to around negative 20% in this recent fall. Around there is where often markets do turn towards the bull side. Regardless of what we think, they just are. Statistically, this is it. Now, if you believe there's a recession coming, of course, it can get much worse. And we'll be talking about what the bond market is saying in just a few moments. But the historical levels, we've hit them. And that's why we're saying, well, maybe we have found a bottom. Maybe we have turned the corner. But we're certainly at a key resistance at this stage. What also happens after the first rate hike? So a lot of people are waiting for Powell, and they're basically saying, okay, first rate hike's going to come, the market's going to sell off. The market's already sold off. Remember, the market tends to sell the rumor and buy the news, buy when that actual positive or that bit of information tends to come out. And all retail traders were left baffled saying, what just happened? That doesn't make sense. The market's working against me. How many times have you said that? Countless times I've heard it over the years. It's not that it's working against you. You just don't know how to be advanced in front of it. Think of it like chess. If you're only thinking one move ahead, then you're probably going to lose the chess game. The chess game's 10 moves ahead or 15 moves ahead by, anyone's top standards by the time you're even there. So what happens after the first rate hike is generally markets go bullish, and 12 months on, we've actually got a 100% chance of it being bullish in terms of what's happened before. So we're talking about yields. Obviously, this is all about inflation. Yes, there's the stuff going on with Europe, but that may not be the true story of the market right now. It's more the news story, but not necessarily what's going on. So a lot of people have been pointing to the inversion curve that we saw with the 20-year, 30-year recently. Now, that was important, and obviously this inversion of any type is quite negative in markets. I do tend to use this one more as an indicator, which is the 2-year versus the 10-year. And that's predicted, albeit early, all of the recent really big kind of crash correction scenarios, these really significant bad ones. And this tends to be the canary in the coal mine. So if you're ever looking for something that's a canary for stock markets and you're feeling bearish, or you're feeling like I need to maybe take some risk off the table, you might be really early, possibly even 1 to 2 years early. But it has got an amazing strike rate of correctly picking huge corrections in markets. So that's the US 2-year versus the 10-year, or whichever way you want to combo it. Now, we're talking about oscillators. We've been talking about things to do with picking up markets in these pullbacks. And one of the ways that you can do that, which is a little bit easier, is basically looking at the S&P 500 stocks above the 50 moving average. If it moves underneath 10%, that historically has been very close to the drop in terms of the full drop of markets, and that was pretty much around those kind of low levels. Now, we also know that around this 20 level has been phenomenal as well in the past. You've got nice pullbacks around that 20. We've reached that twice recently, and I think that is a big indicator. But at the same time, if it ever comes down here, you guys may want to reassess the markets at that point and decide whether that's a level for your DCA or whatever else strategy you have. The VIX, the fear index, what's going on there? Well, it's high, really high still actually, 30.14% in terms of VIX, which means all of your options are very expensive to buy at this stage. But the VIX hasn't been able to daily close above 32. A daily close above 32 would really shock the algorithms, and I think they would move even higher at that point. You'd probably see the stock market start to really turn around for that to occur. But all of the current resistances have been at 37. A lot of people have been playing short VIX at 37. It's called the Widowmaker, I believe, that type of trade. The VIX is scary, so be careful there. But yes, it's 37 is certainly a very key critical zone, and if we breach that, it could be really, really, really volatile for a few days. At this stage, it's just high, it's moving down, and remember the old thing that we always say, if the VIX is above 20, probably stay away from the swing trade. If you agree with that statement or you disagree, let us know in the comments down below. Have you ever been trading, wondering why you're getting caned in your swing style, yet the VIX has been above 20? That might be the epiphany moment that you needed. PCC, put call ratios. Everyone talks about them. Options right now in the market. We've already seen the short ratio on the QQQ is massive, the Nasdaq. And at this stage, the calls are actually starting to outpace the puts a little bit. We've got bullish bets being placed and the PCCs coming down. Now, we use this as a bit of a counter kind of trend indicator. So often if we see the PCC really low, like down here in the 0.8s or 0.7s, it can mean that if we're hitting a key level of resistance on the stock market, we might want to look at some shorts. At this stage, it's in the middle. So not too much information we can get there, but certainly a more positive sign if you're a bear, because there's a chance that the market still may turn around. We'll move over to gold, and frankly, it's becoming a dangerous trade here with gold. It's hit all the levels we wanted. We had 3 levels, 1870 moved to 1910, which we've gotten, and 1910 to 1960. Now it moved above, went to move to 1970, but whatever. 1960 was our technical. We wouldn't have gotten any more, and we didn't get any more, because that's exactly where we expected it to go. So you look at this on a weekly and you say, is that a market I want to be trading right now? And the answer is probably going to be maybe not. The risks here because of the geopolitical situation are pretty severe. And if you are trading gold, be very careful with your stop losses because it's going to be risky both ways. The trend line's holding from the bottom up, and we obviously have a resistance around 1922. They're probably the two key zones of breakout here for this trade, but it's not getting the usual signs. Remember, the gold moves with the US 10-year to a degree, and we haven't seen enough information, enough clarity there on that to get any further action at this stage. We'll come back to it a little bit later on. The same goes for oil. It's a trade that's going up, and if you look at it from a technical perspective, you might say, but Tom, it's broken through on the daily and it's going up. Yeah, but the swing can be too severe. Imagine holding oil through the weekend. Somebody probably did here. I'm not talking energy stocks. That's totally different. If you were holding leveraged oil through the weekend, wow, you might have not slept very well. I mean, it can be incredibly volatile. It could have moved 10, 15, even 20% on you. In this case, it's moved bullish and it is closing above, but I still think this market is tough to trade. So be careful out there, guys. It's still in an uptrend for now, but I could see it turn and we'll be there hopefully watching it when possible. Let's now move into a few of the stock market stocks and then indices and of course crypto just after that. And Tesla here first up, out of the gates incredibly strong. So we get past that 800, we breach straight away, and like we always know with Tesla, it doesn't really give you confirmation in terms of when it breaches. It just goes. And boy, oh boy, did it go. In 2 hours, you were done with the trade. It hit the resistances. I pretty much like the 860. It obviously went a little bit higher. And it actually hit the bottom of our trend line. So this is the trend line that we've had here on the weekly for quite some time and tested it as resistance. So what a trader is going to be trying to do in the next session? Well, the bulls are going to be saying, yeah, let's move that through and let's try to get this thing to 945, 920 minimum in the day. Fair enough. That'll be a pretty big move. But if this thing goes bearish, and I think we have a bit of a reason where it may go bearish, here we are, little resistance kind of play. If we go bearish here, what happens with Tesla? At least back to the 820. So this is really showing some great day trading properties. It's one of our favorite day trading stocks for a reason. It moves really fast and it has tons of FOMO and tons of fear. So that means that the moves tend to be pronounced and then it usually hovers around the key levels, just like it is here after the end of the day. So if you understand anything about price action, it's one of those stocks you do want to be paying attention to. And there's some key levels for the next 24 to 48 hours. Let's move over to Nvidia, another one that we've talked about quite a lot from the trade perspective. It's not doing well, and a lot of this has to do with, remember, on the weekly, there's two big rejection candles here. Now there's one big rejection candle backwards. What's that mean? It's a battle between the bulls and the bears at this zone. If Nvidia is able to breach this high, it's probably going back to something around that 260 level. And if Nvidia breaks below, similar to the Tesla trade, all of a sudden, you've got a real open plan here. 230 first stop, but after that, further weakness. Nvidia is entering into a seasonally weak year. Seasonally weak. Midterm years don't tend to do well for it. And it does have a huge amount of retail trade on it at the moment, which can make it susceptible to being overvalued, which we have discussed a few times. So be careful on Nvidia. It's a great stock. I love it. I got a 3080. Yes, I'm lucky enough to have one of those, luckily. Thank you, trading. But on top of that, it is one of those stocks that while you might want to hold it in your long-term portfolio and feel great about it, we do need to understand it's heavily manipulated because the amount of retail trade in it is massive at this stage. Let's move over to ARKK. Trend line still holding. Now, it kind of reminds me of last time. The rallies of ARKK into the 20 moving average, and then that being the point of rollover for the stock market. Where are we now? Right on it. The 20 moving average and our trend line again. Wow, it's kind of crazy how often this has occurred. Now, it's not showing signs of weakness, but it certainly is right where we expect it to have some form of sell-off or potential bearish action. And you could kind of see something like this occurring, and then that being your proper breach. Or it could just go through first entry kind of idea and then a second entry if the market keeps recovering. When we look at the Nasdaq, it'll become more clear. IWM, we always go with this one as a bit of a tell of the broader market health. We talked about the A, the B, and the C pattern. it hasn't come to eventuation. It basically has held the support and it's bounced up. Luckily, probably don't trade IWM too often, and we know that the technicals on this have been lackluster to say the least. I mean, this base over here should have gone. Obviously, the Wyckoff false break over here we covered. Everything else, it's just not great technically. But what it can do is it can show us recovery. So like over here, it might show us the beginning of a sign of recovery for the broad market. Think of the 2000 small caps really as the lifeblood of the market. If they're recovering, the rest of the market is saying, hey, things aren't that bad. It's looking better. They cop it at the start, but they also recover very heavily. And you'll notice that when you're talking about the depths of the COVID crisis, the return on at least the short return here for the Russell was 145% very quickly. So it was a very extreme move. Let's move over to the DAX. Now, the DAX is showing us that it has no idea what's going on. The markets outside of America are all kind of showing weakness still. And this is really weird. Like, we're in the middle of nowhere. The DAX literally is saying, I don't even know what's going on. I have no idea. This is weird. It's just completely weak. And it's making a series of lower highs. We'll keep covering it, but remember, this one here is in currently a Wyckoff, and Wyckoffs can mean more than just the traditional drop. Like, our first target was right here. I mean, yes, it hit it perfect. Tick, 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 tick. But this is two false breaks to the upside, max pain, and a rejection. So DAX still showing weakness. The Dow, a very similar kind of setup, except much more strength here. It's just kind of hovering. So it's come back, but it's still not as strong as maybe the other markets. It's kind of like where you would expect some problems to be. Previous support buying back at the 24th of Jan. We're at the resistance. And this is the story as we go through the markets that we're finding here. The QQQ can't make a new high, but you do see this big bounce. So if we start to move forward, what's that showing you? The market is probably pretty happy to move towards these previous peaks. It's looking towards a lot of strength. And the reason why is because look at this critical here on the US 100 NAS. We have here, yes, it's an inverse head and shoulders. Left shoulder, head, right shoulder, big kind of neckline, right where we expect the resistance to be. Big problem, 14.2. S&P 500, similar level. We'll look at that in a second. And if it breaches through, the continuation kind of pushes us into that 15.2 level, which is previous support, previous resistance. So it's a big deal here in the next 24 hours for the markets. You could see it going bullish and then, of course, continuing on the ramp, or you could also see the bears to try to fight it out. And considering how much ramp we've had, it may make sense for the bears to get involved here. And the bond market is telling us, well, yes, we found a base. The bond market went positive, but then it didn't do anything. So the markets continued to go up higher, and the bond markets kind of sat there and said, yeah, I'm not too sure about this yet. I'm not convinced. The bond traders are smarter than the stock traders. So if the bond traders are saying, I'm not convinced, then maybe we shouldn't be convinced just yet. And if they come with us through the break, that would be positive. The S&P 500, you can see here the big rebound. These are our kind of like key lines for the SPX. Where are we? We're at the first line. Where's the true tell of the market full recovery? Somewhere around this downward trend line. Then obviously 4,600. What a level. I mean, you get through that, you'd be thinking all-time highs on this market. So we're not out of the game yet in terms of the bears. And it's pretty simple where you're going to be looking for shorts. I mean, if shorts come through, let's load up the US 500 for a second here. That's the futures market. And we'll just have a look. We're at the resistance. You can see the bounce at the end of the session. If you sell this zone, and especially if you move through these previous supports, what have you done? You've created a little double top. We saw that previously over here, and it created a massive short. So if you get through this zone and you start to see selling in the morning, the obvious targets for a lot of people are going to be down here. And if it breaches that, then you're talking about down here. It's a constantly evolving situation. It's hard pressed. I mean, at the moment, the market says still bearish on the bonds, but with one big bounce. The actual stock market is saying recovery is currently in play, but we haven't got through some of the key levels. it's a tough one, but it's case by case. And I think that's what you can probably see here in these markets. If you know what you're looking for, you can find your day trades, you can find your scalps, and of course you can dollar cost average or whatever your strategy is for your investments. Now, Bitcoin's a little bit different because Bitcoin just went, you know what, I'm going to break anyway. I'm going to go up and I don't care what anyone else says. So we've got the trough, we've got the peak, we've got the higher trough, and then we've breached through. I posted this on the Twitter as a key level, 40,500. And the breach of that, similar to Tesla, when Bitcoin goes, it tends to just rocket through. And it hit our target, 44K, immediately. So that is the key resistance now. 44 to 46, there's a lot of fighting in there, but we noticed we've never seen a daily close above this 44K. So a daily close, that could actually significantly push the crypto markets. And if it gets through 46, you'd have to think the crypto markets are decoupling from the rest of the markets and going bullish. I'd be careful in this move, but it's still a very nice one here for the crypto markets. And if you're thinking, oh, I missed out, there are other trades that go with it. In the stream, I was talking about the Ethereum trade, the bounce, the breach of a very similar level. Obviously, the move would be to the 3,200. Money goes into Bitcoin, comes out of Bitcoin, and usually starts to move into the other coins as it goes. So it's pretty important to look at. In terms of the news for the week ahead, we continue here with a whole bunch of stuff. We've got Fed Chair Powell testifying. We have ISM manufacturing PMI 10 a.m. on the Tuesday, March the 1st. Then we've got FOMC, we've got the Bullard coming out. Oh, yay, fun for us. Wednesday 2nd, maybe that's good for the Bears. Bullard is scary for probably the Bulls because he says all sorts of craziness. And then the big number is coming at the end of the week. Do not lose sight of the fact that we have the jobs numbers coming out. Non-farm payrolls Friday. Oh, it's an action-packed week for sure. If you haven't already, consider following us over on Twitter at FX Evolution or join us in the Discord, the public or private Discords. And remember, we do have a sale on our courses over at fxevolution.com at the moment. And if you are interested in any of those, click on the links in the description down below. I've been sharing a few things. Here's the one I shared on the crypto markets. Obviously, the expectation here of the breach. And there's the key level there, 40,500. Thanks so much. Remember to subscribe, smash that like button if you enjoyed the video. We'll see you in the next one. Bye for now.